Welcome to the Multifamily Investor Nation podcast, sponsored by CoStar as well as RealPage IMS Investor Portal Software. I want to welcome our very special guest here, Gary Lipsky, to the show. Welcome, Gary. Looking forward to diving into this property with you.
Same here. Thanks for having me, Dan.
So we're going to be diving into a property called East 3434, located in Phoenix, Arizona. This is a 128 unit property acquired for $15.15 million but in November of 2019. So looking forward to diving into this, Gary. But before we get started, I want you to talk to the listeners a little bit about yourself and your background and how you got to this point right now to be able to acquire this type of an asset.
Yeah, I've been an entrepreneur my whole life, running companies. So had a lot of experience in management and operations. In 2016, I sold a business to get into real estate full time. I had been investing for a while, but I wanted more time and money to invest, and so I kind of dove in and checked out different programs, podcasts, books, meetups, anything I can get my hands on, and then. After investing more with other people, I started doing it on my own, and it was great to have that management experience in the past. So, running a multifamily apartment complex is like running a business, and so it was great to have that experience.
Well, I tell people that all the time that, we're really buying businesses that just so happen to have real estate associated with it when you start talking about these large multifamily assets.
Yeah, absolutely. It's about managing a team, reviewing the numbers, constant improvements, and discussing, reporting out to your investors, your other sponsors, whoever it may be. So yeah, exactly like running a business.
Yep. And one of the biggest things that I always talk about too is, and it's on my red flags for passive investors. And I actually wrote a white paper on that about what are the 5 red flags for investing in multifamily. One of those red flags is that somebody on the team must have some sort of background and success in business, and it has to be successful, because you probably know people who know how to run a business, but they just ran it into the ground, right? We don't want somebody like that managing our assets. So let's dive into this one, Gary. I want you to first get us started and tell us, how did you actually find this asset?
So one of our partners got the deal before it went to market, because he had done another deal with his broker before. He had a full-time job. He didn't have time to underwrite it. So he sent it to my business partner, Kyle Mitchell, who quickly underwrote it. He texted me that day, said, "Hey, we're going out to Phoenix the next morning." And we did. We left. It was like 4 or 5 in the morning to drive out there, because, last minute flight was too expensive. We got there at 9 a.m. We were one of the first to see it, and we really liked the deal. When we were looking at our underwriting, it made sense. We knew the area. We had gone after an apartment building right down the street, so we were all in and aggressively went after it right away, versus getting into a bidding war where you really never win in a bidding war.
Yeah, no, that's a great way to do it. So how many rounds of offers did you actually go through?
Really one, I think, because they wanted a price. I guess it was 2, but you're going through the broker, so you're not really giving an offer. You're kind of going back and forth. You're working together for both sides to get what they want. And ultimately we came up with a number that worked.
So how soon after you first saw this deal or kind of came across your desk did you actually go fly out to the property?
Oh, within 24 hours. We got the deal probably in the afternoon, and we left, first thing in the morning the next day. It was coming to market, and we didn't want them, a lot of people to see it, and then they kind of wait for the best and final, which may be the first round of best and final, and then you go to another best and final. So we felt like we were able to take this down at a number that was well below if we went the whole way.
Why do you think a seller would want to do that?
Well, they're getting hard money from day one. They're getting that the surety to close. They got a number that they wanted, and we got a number that we wanted. Ultimately, that number changed down the road because of things that we found and whatnot. But I mean, they made a killing on this deal, quite honestly. They bought it significantly less for about 4.5 years ago. So, I mean, it was, I'd love to be in their shoes, quite honestly.
It's always that way though, isn't it? We always, you look at the proceeds that they get when you're buying an asset on that HUD statement, you're just like, man, they're making a killing off of this thing.
Yeah, absolutely. But knowing that they had it for at least 4.5 years, you see a lot of deals that are trading at 2 years, 3 years, and it's just getting flipped and flipped, and you don't want to have that hot potato. So we knew there was a tremendous amount of meat on the bones. It wasn't well managed, so we saw tremendous upside. Despite what we were paying, it was still priced right, and we thought we can make a lot of money on this deal.
So you talked about surety to close. What kind of surety to close were you able to provide to them?
One of our team members had done a deal with the broker before, as I said. So he felt comfortable knowing us, and we've talked to the broker many times, met with them. So they felt, based on our financial net worth and liquidity and all those things that we put together to talk to the broker about, they felt like they can trust us to get it done.
What about earnest money deposit? You mentioned that. How much was that was hard? And for those of you who are listening, hard money, we're not talking about a hard money loan, right? We're talking about earnest money deposit that goes hard, or what is a non-refundable earnest money deposit. So what kind of like non-refundable or hard money did you have to put up for this project?
Yeah, we put up 200,000.
Okay. And that was day one?
Yeah, but we had access previous, before it went hard. So we basically did all of our inspections before that money went hard, which was great. Our third party property management company went in. We had a team of like 12 people. We split up, walked all the units. They went through all the leases. We had HVAC out there, electrical, roofing. So we had it all done. We didn't need a long due diligence period, because after that one day we had a story to of where everything stood. So we were good.
So you inked the LOI, and then they gave you an early access agreement to be able to get onto the property before you actually inked the PSA, correct? And then once you got that done, you're able to ink the PSA?
That was a long process, because the seller didn't give his lawyer the copy of the LOI. So when we got the contract, we're like, what the heck happened here? It was completely different. I mentioned 200,000. On that, they had 462,000 as the hard money and deposit. And there was a lot of other things that changed. And quite honestly, we thought the deal was dead. We leaned a lot on the broker to kind of massage the other side and get them to communicate and get things done. And you would think after you sign an LOI, the contract would be done within a week. It took us probably about 25 days to get it right. And there were times where I thought this deal was dead.
And did you get that draft PSA before or after you'd already done some of your on-site?
It was after. It was after. Okay. Yeah. The cost wasn't that much to do the due diligence. But obviously we were willing to walk if we couldn't get this right.
Yeah, I would definitely think that'd be frustrating if they signed an LOI, or at least reviewed the LOI, gave you an early access agreement. You already went on the site, did a lot of your on-site due diligence, or 90% of it, if you will, and then all of a sudden they give you a totally different PSA that has nothing to do with the LOI.
Yeah. We like I said, we leaned hard on the broker, who's trying walking that tightrope, but. He got us to that point, and so we said, you gotta take us home. You gotta figure this out.
No, that's very interesting. So did you have any issues come up during the due diligence process?
Yeah, absolutely. We found out that they were stuffing the tenant base. So they had people that weren't meeting the 2.5 monthly income to support their rental payment. And they had renovated 19 units, and they weren't getting the rents that they had expected. Now, we love the area, and it's definitely changing from a C to a B, but there was a lot of work that needed to be done. Also, roofs, the warranties on a couple of them were expiring within 6 months and needed quite a bit of work. HVACs were in bad shape. So there was a lot of deferred maintenance. And when we budget, you always want to budget for deferred maintenance. You want to have that cushion, but this was definitely a lot more work than we had anticipated. So we went back to them and talked about how the deal has changed, obviously. And so we were able to negotiate a $250,000 reduction in price. And again, and during that period, we thought the deal was dead as well, because we drew a hard line in the sand, and there was a lot of back and forth, but eventually we got there.
Yeah, that's good. And what was the original purchase price or the original offer price?
$15.4 million.
Okay. And so after you went through the due diligence, found those different discrepancies, you went back, and at that point, were you able to kind of not necessarily threaten, but kind of hang it over their head that because of the discrepancies in the presentation of the financials, that you could actually get your hard money back?
Yeah, and the brokers didn't want to deal. If you're gonna sell it to someone else, they're gonna have the same issue. So might as well let's work together. We wanted the property. They wanted to sell it. Let's figure this out. It would have been nice to work with a seller who was, responded, well and worked with us. There was a struggle from day one. And I think one of my lessons is if it starts to be a struggle from the very beginning from a seller, maybe just walk and go to someone else that's going to work with you, because it was very, very frustrating.
It's not like in the beginning, if it's going that way, if it's going to get any better as you move forward down the process.
Yeah, absolutely.
So how did you end up financing this project?
Sorry, say that again?
How did you end up financing this project?
So we went with a Fannie Green loan, and this is, we faced some struggles in this as well. I think originally we budgeted for 3 years IO, and knowing that we could potentially get 5 years IO. But this was in August when they kind of maxed out on the Fannie max that they can loan out. So funding, the rates jumped up, IO went down to 1%. There was a lot of craziness. So we had a webinar scheduled for Tuesday, and I think this happened like on a Friday. We were practicing our webinar, and we put a freeze on this until things can shake out, because you always budget for a cushion and your financing, and because the rates jumped and the IO dropped, it took away our cushion. So we didn't want to change the deal to our investors. We really wanted to know with some level of certainty where our financing would get to be. So we put a freeze on this for, I think, about 3 weeks, until everything shook out. We ended up getting 5 years IO, even though we had budgeted for 3, went down to 1. So it was a roller coaster ride on the financing, but like anything, it's that perseverance and just being patient, and things will work itself out.
And we actually have done some green loans ourselves in some of our projects, and they've actually started to do away with. I have, like last year, you probably got one of the last few loans available for that green program, because they actually have done away with that now.
Yeah, they have gone away with it. They've got some other things. So we were lucky to get it, because we ended up getting a 76% loan to value and 4.2% interest with the 5 years IO, which was great for our cash on cash return for our investors.
Mm-hmm. And as far as the green program, for listeners who aren't familiar with that, tell them a little bit about what that green program was and what you had to do on this property in order to qualify.
Yeah, so what you have to do is provide a savings of 15% on water and 15% on electricity to get a discounted loan rate. And so they'll do a report for you. I think it costs like $15,000. Then they give you back that money. And so we figured out what are the most cost efficient ways from that report to get that savings. And so low flow toilets, some aerators, and a lot of that. I mean, the savings has been much more than the 15% that the minimal that we had to hit.
And they usually give you like a chart or a graph to show which ones you can do and what percentage that these experts are telling you it'll save you and all this kind of stuff. And then you got to follow up. The lender will follow up, making sure that you're getting it done and processing it. And what's the discount that you saw on yours for being able to do it as far as off the rate?
Might have been 15 bips. I forget,
Yeah.
but
I think it was like 15, 20 bips.
Yeah.
Yeah. That's not a bad deal for trying to help out reduce expenses on your side, as well as being able to get that. So obviously you have to budget for that, but a lot of these local electric companies, utilities, your water companies, they'll actually provide a lot of these things for you for free. Like we have some on one of our properties. We reached out to the power company and they came in and installed all types of things on the property, LED lighting, and then the water company came in and gave us low flow shower heads, and also the electric company gave us, they wrapped all the water heater coils, or not coils, but the wire, the little piping and stuff like that to help reduce expenses there too.
Oh, that's great. I'm gonna look into that on our next deal to get it for free.
Yeah. Hey, it's worth a shot. I mean, worst thing they can say is no, but so far we've been pretty lucky on ours.
Right.
Yeah. So how did you end up structuring this deal with your investors?
So we did a 70-30 split, 8% pref, and we didn't do once they get their pref, we didn't do a catch up. It's a true pref. 15.25% IRR based on projections, 90% return over 5 years, 2% asset management fee, 1% acquisition fee.
That's good. That's good. Those are a pretty straightforward project. Any secondary hurdles in the waterfall, or just straight 70-30 after the pref? Just
straight, keep it simple.
Yeah, that's good. That's good. And 90% on 5 years, 15.2. What's the actual renovation for this particular property?
Yeah, so we allocated $1.4 million for CapEx. So some of that went to branding. Originally it was called La Casa, and so that's geared towards one demographic. So we changed it to a hipper name, East 3434. Did much better signage in the front of the property so that you could see in. It's well lit. We had these massive banners on the two buildings in the front, so it's like 15 by 20 feet. So it's on a busy road. So anyone that drives by will see, washer dryers and units, availability, some of the amenities, which is great. But yes, we're putting in washer dryers in 90 of the units. We're also doing new cabinets on ones that need it, stainless steel appliances, higher baseboards. Like not the plastic 3-inch, but the really nice baseboards that help it pop, do an accent wall. So these are, jumping up the rents a few $100s, quite honestly. So people love the renovations. We're adding a dog park, doing some paint, not a lot, just some accents. We have money for obviously the HVAC and the roof, and yeah, so 1.4 million, so a significant amount.
How is COVID-19 going to play a role or have an impact on this particular property?
Yeah, so we bought it in November. So really, as we're implementing this plan, we haven't gone that far in this plan yet. So we stopped some of the major renovations. We are doing the washer dryers, and we're starting to get back into that now as we've seen rent collections play out. So April, I think we're down to like 87% collections. May jumped up to 93%. So we're feeling really good about where we're headed. Obviously, there's still a lot of unknowns in the next few months, and people will be still out of work and whatnot. It's a C-class property, but we're getting back to the renovations and the CapEx and improving the property. The area is churning. There's a great new charter school across the street that's helping. There was a property down the street that sold for $52,000 per unit more than what we bought it at. So we feel pretty good about that. Nicer property, but still, it's that area is slowly turning from a C class to a B class, which is helping us as well.
Yeah. How did you work with the property management company to acquire this one? Are you keeping the existing one? Or did you bring in a new team, or what was the changeover process like?
Yeah, we saw that as an opportunity. We were familiar with the other property management company, but they're more of a mom and pop. They're best with smaller units, up to maybe 35 units. They just don't have the infrastructure that this other company has. And we worked with them, this new company on our Tucson property. So we were very familiar with them. They managed over 16,000 units, but we never felt like we were just a number to them. And they have a tremendous infrastructure. So if someone's sick or quits, there's someone there to help the property. And they've been great. We met with them many times before we closed on the deal with the rehab team, with the marketing team, and getting that business plan in place and getting moving on that well before we took over.
Going back to the capital raise again, or the kind of working with investors and how you structured it there, what was the timeline like for, doing that webinar or reaching out to your investors saying, hey, we have this project, and how long did it take you to get to your full commitment amount, and what was that process like?
Yeah, this was our first property we bought was 1.7 million. Now we jumped to 15.15. So much bigger raise, unknown for us because, we're looking to raise a lot more money. Now we had more partners on our team to spread out the workload, the raising the capital, the marketing stuff, which helped. You definitely need a team to get there. And so probably we had the webinar mid-September, and then we closed November. But it's just, people commit to investing, and then you've got to make sure they get the paperwork done and get the money in. And having not done a lot of deals yet, you've got to be confident and patient and whatnot that you're gonna get there. But it doesn't happen overnight like that. Maybe after we've done 10 successful deals, it'll be a lot faster. But it takes time, and you get there. A lot of people had expressed interest before, and we kind of knew what we can raise, and eventually we got there, which is great. And some people invest more than what they say they're going to do. Some people don't invest when they said they were going to invest. Until you're there, you just don't know.
Did you have any sleepless nights?
My business partner did. I've been through, the Great Recession and some other things. So I was able to be, to sleep a little bit better. Definitely stressed out, but I knew we'd get there.
Yeah. How many investors did you end up having for this property?
I think about 75 investors. So quite a few. Yeah. I think average investment was about 72,000. We had, obviously you're going to have the biggest share at your minimum of 50,000, but we had, someone at 300, 350, 250. So some big chunks from a number of investors.
Yeah, no, that's about right. That's about what I see right now with most investments right now is about 70 to 80,000 as far as an average investment. Pre-COVID, you might have seen a little bit higher than that. We might have seen on some of our projects, we were seeing like 95 to 100 as far as the average investment. But right now, what I'm seeing is about 70 to 80,000, per investor as far as the average investment. So for those investors who aren't bringing on large equity checks from people who are bringing, $3 or $4 or $5 million, but your group, my group, we're looking for investors that are everyday investors that don't have access to these types of institutional quality assets, and to be able to help them take down some of these projects. We can do it all together. Can you think of anything else that happened on this property, issues, struggles, challenges that came up throughout the entire process that you think might be valuable for the listeners that we have not brought up yet?
Yeah, the day we were going to close, our team was on site, ready to take over, and they found a down unit, a unit that had some mold. And obviously this was, something that should have been taken care of by the seller, and they didn't. So we, reached out to the broker, reached out to the seller, and we're in this, this is the end of our extension period. This, guns are drawn, trying to figure out, like, you need to fix this. And there's constant surprises. They were able to, like, fix the mold, but we had to do some work on our end. But there's never a dull moment. And once you finally feel relaxed, like, you're in trouble. You've got to stay on top of it. And luckily our team was there and was able to figure that piece out. We also had, there's along the way, there's going to be surprises with, certainly now with COVID, we've had a lot of transients that were jumping the fence and coming into our property. So we've had to add some security patrol, tenants being home more, and you just got to monitor that and work with them in constant communication. But there's never a dull moment.
I can definitely see that for sure. Well, I have two final questions for you, Gary, as we wrap things up. They're kind of two contrasting questions. The first one's going to be, what did you find easiest throughout this entire process, and maybe in the beginning you thought was going to be a little bit harder?
Just working with a team. Everyone, worked together and was aligned, and just good communication. And you don't always know that going in, particularly under stressful situations. And it was great to see everyone, rise to the occasion and get there.
Yeah. The other side of the question is going to be, what did you find was harder than expected that maybe in the beginning you thought wasn't going to be as bad as it was?
I guess definitely working with the seller. I thought that, in my other real estate transactions, we're working together for this common goal. And he was just not willing to be fair and reasonable during any stretch of the process. So that definitely made it more stressful, and made it more uncomfortable along the whole way. And so that really stuck with me going forward. If a seller is not working with you right from the very beginning, then maybe move on and work with a seller that is, because there are so many other things that you have to worry about. You don't want to deal with a seller who's just not working in a meeting you halfway.
Yeah. When did you first tour this property?
It was, I think, end of June, I believe.
Okay.
Yeah.
So you first toured it in end of June, and then got it under contract in July? July?
There was a lot of, like, back and forth, getting to the PSA. Everything was a slow process. I think we finally got it under contract towards the end of August, but okay. even though we had the PSA and all that, so it took a while. It took longer, obviously, than it should have been.
And in the contract, was it a 30-30 with an option to extend for another 30 days? Or how did that timeline shake out?
Yeah, it was a 14-day due diligence, no financing contingency. It was 45 days to close, and then 2 30-day extensions, and each extension we did would cost us $50,000 released to the seller.
Oh, so that didn't even go towards the purchase price.
Goes towards the purchase price, but he wanted it released to him versus going to escrow.
Got it. So did you have to execute one of those extensions?
Yeah, I think we executed both. One, because of the whole interest rate thing, it just took longer. We were probably ready to go by the end of the first extension, but we extended it just to get all the ducks in a row. I think the lender took longer than typical, and it's always up to the very last minute anyway with the lender. Yeah, at the end of the day, we got it done. Wasn't easy, but learned a lot from it, and yeah, we're aggressively looking for the next one.
Awesome. Well, Gary, I really want to thank you for your time and being here and sharing with our audience. And there's a lot of different golden nuggets we've learned throughout this process and throughout your acquisition. And how can the listeners reach out to you if they want to find out more information about you and your group and possibly join you on one of your future properties?
Yeah, my email is glipsky, Lipsky at APT Capital Group. And if you go to our website, we have a free passive investors guide. And I'm on social media, LinkedIn, Instagram, Facebook. So reach out, connect. Happy to talk real estate.
Awesome. Well, thank you so much for being here, Gary. Looking forward to continuing to follow you and looking forward to having you on one of our future episodes as you continue to close more deals.
Thanks for having me, Dan. Really appreciate it.
You too.